Hey guys, we're here today with Zach Bradford, CEO, and Gary Velli. I'm sure I torched that, so you'll have to help me there, Gary. With CleanSpark I expected you guys to bail out today. I figured y'all would be traveling, looking at facilities and dealing with the hurricane. Really appreciate you being here. Welcome, guys. How is the world of CleanSpark?
Thanks for having us. Yeah, the world of CleanSpark has not been without turmoil. That's for sure as far as the hurricane goes. But all in all, first and foremost, our teams are safe, and everybody's accounted for, and our facilities fared very well. So we're just in the process of bringing everything back up to normal. And today's actually the last day of our fiscal year. We have a 9/30 fiscal year. And so we're closing out a big year. We've had triple-digit growth, and really excited about the future to come.
Well, why don't we talk about as you're ending this year? I don't know how much of that's public yet, Zach, but can you talk about the performance from last year to this year, what the accomplishments have been, what some of the challenges, and then we'll get into the peculiars. I know the audience will be very interested in what's going on in Georgia, Tennessee, and what have you. But performance year to year.
We've had a big year. Again, I'm going to stay to what's public, which really relates to our hash rate and the Bitcoin production. So, we started the year at right now, at under 10 exahash, and we're finishing the year right around 27, 28 exahash. So monumental growth. We've done monumental growth. You think of the underlying megawatts that's taken, how much our team has built, but also we bought a lot. We've been really active in the M&A space. I think we've done, 6 transactions in some. Some of them are, joint transactions, but we've done multiple transactions that have ultimately resulted in all that hash rate coming online. A big part of that too was we locked in the miners that we have, most efficient miners, latest, greatest, but we locked in the pricing in an option model where as part of that, we believe that we're on the precipice of a bull market. So really nailing down, locking in the prices of the servers, because those go up and down with Bitcoin.
When did you do that? You executed that some time ago, right?
Yeah, we executed it in January, and then we signed another contract last month to just lock in the next round of units at a fixed price going into 2025 also.
And these are, so you have the option to walk away if you choose, if the market turns down. Is that correct?
Yes, that's correct. So we've already exercised the first option because we, built infrastructure to take all of those. But we have an option on an additional 50,000 of the S21 XPs going into next year. And if the market turns, then we don't have to take them. If the market stays, then we've locked in our pricing, and we have price certainty going into next year, which is a big deal in a market that's quite as volatile.
Yeah, for the audience, what he's saying is the price certainty means that he's capturing a margin and he's not going to be exposed to floating exposure. And maybe, like, there are other people that are literally floating on power prices, right? Some of your competitors.
It's not just the power prices, it's the server. It's all the components we do. And the servers is what we've locked in because, you go back 4 years ago in the bull market, people were paying $10,000 a unit for a unit that, 8 months before, people had been paying $1,200 a unit. So you can see an outsized increase in the servers themselves. And it makes sense. You basically have a money printing machine, except it prints better than money. It prints Bitcoin. And so when Bitcoin's valuable and at high margins, the secondary market for those is extreme. Just like what happened with NVIDIA, right? Same thing when there's high demand for their servers, their prices skyrocket. We're actually on the other side, on the power side. We like exposure to the market rates because we're in environments where we actively participate in that to help drive our cost and also the communities we're in cost down.
So said another way, are you arbitraging all your optionality in whether you mine Bitcoin, don't mine Bitcoin, a little bit the same way that you would treat your option on the machines?
To a certain degree, a little different. So
Well, maybe I misunderstood. Maybe you can say it differently then.
Yeah. No, maybe you can address from an optionality point of view, from a financial point. But ultimately, we mine Bitcoin when it's profitable and we don't when it's not. But that participation in the market in a grid-wide setting keeps annual prices pushed down. I know Gary's got some statistics on, how utilities and grids look at this.
Yeah, I mean, look, if you, our average power price last quarter was about 4.8 cents. And that's all in, including sales tax, margin, transmission, delivery. The last 9 months, it's been—
And capital costs?
No, that's just operating costs of power, 4.8 cents.
Okay.
It's about 4.5 cents for year to date, 9 months through 6/30. But, in speaking with utilities, I mean, look, peak rates when everyone flips on their HVAC machines, right? Because either cold front comes through or it's hot during the summertime, could be anywhere from 2 to 4 or 5 hours a day that everyone flips on their HVAC machines, right? Now you have peak demand, and it could be as much as 40, 80 cents a kilowatt hour, which at current Bitcoin prices wouldn't make sense to run through that. So we're curtailed for those couple hours through those days. But what's interesting, at 40, 60, 80 cents a kilowatt hour, that type of profit that the utilities are making is going to make up a very large portion of the profit for the utilities for the year. So just by us taking a back seat for what is a couple hours and not a whole lot of revenue loss, really, when you look at that curtailment, ends up being significant to those utilities that they can only go back into the communities, into the grid, and potentially getting new power generation sources as well.
So you're becoming their best friend, right? You're starting to look like Dark Star Energy to them.
Yeah, absolutely. Because we can avoid them flipping on peaker plants, which again, there's big revenue dollars that get paid in, but they get eaten up by the generators themselves because they have to cover all their costs a couple times a year. Most generators that have multiple generation facilities would much rather never turn them on because they make more money keeping them off. And so we allow them to have that flexibility. In some of the utilities, we may be as much as, like, we're approaching 20% of the consumption of what the entire utility produces. And so we really can help them control what their peak demand is on an annual basis, which sets a lot of their pricing, especially if they have to go to third-party peaker plants at that point. They can just avoid those contracts altogether.
And ultimately, the ratepayers end up benefiting from that because we don't take a piece of those peak rates, right? In some jurisdictions, there are miners that want a piece of the action because they shut down. But us, we think that that's really an advantage for having those market rates, and we don't want to profit really on the back of ratepayers.
Yeah, you're better off leaving that margin to the utility, and you're their friend. Have you seen, I didn't expect to go here, but have you seen a difference in the way the utilities are responding to you guys as an industry that, oh, wow, this is actually useful? Have you seen a better education?
I would say absolutely. So we participate in all the emergency programs. And then when we arbitrage, there's not as much a demand response payment. I think you could contrast with what's happening in Texas right now. So Texas right now, the miners are still the utility's friend, but because they're making money the way they make money, they're not viewed that way. So right now there's a lot of political backlash around that. And some of it's true and some of it's not. There's always the mainstream media headline that makes it one thing. But when you don't ask for a handout for helping the utility in the way that we do, the only way we get a handout is the future hours are generally less expensive, but there's not a direct payout that's happening.
They're giving you credit?
Yes. But it's a fixed credit based on the programs we participate in instead of a market credit. So we'll take a quarter of a penny for the whole year, as opposed to 5 times a year getting a windfall. And the windfalls can be painful for both the utility and the community participants. And so we've avoided those in all the jurisdictions that we operate in. And then you get a completely different reaction. Like, we are hand in hand with the utilities we operate in, as opposed to it costing them money when we have these outsized events.
Yeah. I like that strategy because you're staying in your lane. And I do not know anyone, you guys don't know this, but I started my career in the energy space, spent 25 years building Dynegy. I don't know anyone that hasn't lost $150 million trading energy. Not one human being. If you've been, I have, including me, I have lost a humongous amount of money trading the most violent commodities in the world. It makes Bitcoin look like Bitcoin's a little Nancy. Bitcoin has no volatility compared to electricity. I mean, I've seen entire nuclear power stations, just the whole industry just goes bankrupt over one night in the UK because you set the market correctly and they can't compete. I think you're doing the right thing. You're gonna get being the good guy. First off, you don't have to have a massive risk management team and power, and then you're gonna have to pay guys like me to run those divisions. And then your shareholders are gonna be like, how much risk do you have? What's your bar? What's your value at risk every day? And you really will not know. Not really.
Yeah.
I love that strategy. I think the winners are going to be the guys that stick to their knitting. I think. What about? Can you see yourself going further upstream? Because there's going to come a point in time when they're going to take out the arb. Like you're going to just start looking for the massive arbs. I mean, I could see people trading Bitcoin and Spark spreads, right?
Yeah.
Like, I mean, this is going to get really intense.
Yeah.
Would you imagine going upstream and solving production problems with either too much or too little production on either power or nat gas?
You know, there's absolutely opportunities to do so. We've, again, going back to staying in our lane, we feel like what we do the very best, and that focus has allowed us to be the best at what we do. There's absolutely opportunities, especially with natural gas plants, to create a significant amount of arb there. But you now end up running completely different teams. You end up running teams instead of running data centers. They're now running everything, the ins and outs of a power generation facility. Now we could absolutely acquire that talent as we pull in an asset. I'd like to see our balance sheet, even bigger than it is now before we do that. And I think we'll get there at some point in time in the future. It's just not now.
So your market cap is 2.3 billion today. Your balance sheet, what would that look like? An improvement on your balance sheet?
You may want to address that.
Yeah. Look. I think it really depends where Bitcoin goes. I would probably say have to be at least a couple of billion until we start considering something else, right? Because as you see, when you look at our historic performance, we've built the company around optionality, which means not only do we want to have optionality from an operational perspective, but also optionality from a financial perspective and be able to leverage the balance sheet where we need to. But if we're going to enter in any new venture, we just want to make sure we got the proper liquidity and the proper resources to do it correctly.
Yeah. And ultimately, we're getting a better return on, capital. And right now, with the way the markets are, with interest rates still up, and this industry not having a ton of access to debt capital in particular, it means we're using equity capital to really fund our growth. So we're looking for fast returns and high margin returns, and we're getting much better returns in the Bitcoin space than we would see with especially heightened risk volatility around power plants and things like that. Again, doesn't mean it's not a good move. It's just with our cost of capital where it's at today, it's not the next move I would take. Yeah.
Gary, are you seeing the Fed rates? Are you guys projecting an aggressive move here? I mean, my brother and I think on the real estate side, this has to go back to where it was. It ain't no chance it stays. They're just going to print, especially after this Tennessee thing. Lower the interest rates. I could see super bonds being like, if I'm Trump, here's a $5 trillion industry for the U.S. only infrastructure play. That would be great for you guys.
Yeah.
We start building infrastructure, rebuilding it from scratch, bring all those soldiers back here, stop sending money to everybody else and their brother, and let's rebuild America. You're going to be a part of that.
Yeah. Look, the money printers are definitely on. They're going to stay on. I think regardless of what happens in November, you're going to see easing monetary policy on both sides of the line. It's just going to be, how much. Ultimately, how's that translate to the debt markets for, companies like ours? the debt market's been relatively closed, right? And it's not like we're seeing, sub 10% rates in the bond market. In fact, you haven't seen anyone write a bond of any size, for quite some time now. But with that monetary easing, and once risk on assets and money starts to come into the marketplace, you're going to start to see, really companies start to leverage a little bit more. But that's really not going to change our perspective on leveraging the balance sheet, right? Because when you have an underlying volatile asset such as Bitcoin, we're not going to go leverage, have debt to EBITDA ratios of 4 to 5, right? We're just going to ease into it, if we do it at all. So I think that it's really going to be a wait and see. And again, we have the option, right? And right now we don't have to go out and get that, right?
No, but I think if you, it's bullish as an investor. If I see interest rates continue to come down, that means your costs are going down. Your optionality is expanding.
Absolutely.
You have an ATM, if that's a bad word, I'm sorry, but that's what people refer to it as. It's a way to raise funds. I don't know that interest rates are ever going to get to a point where if you can pull on the ATM, it's going to ever be cheaper. That's pretty easy. That's going to be the problem, right? It's just easier than a big debt deal. Relative to last year and this year's performance, what are y'all expecting next year? Are you expecting double the same kind of growth?
From where we're at now, I think we'll just about double over the year is what we're projecting. Right now, like I said, we're sitting about 27, 28 is our production capacity. And we've talked about hitting 50 next year. Now, 50 is actually, we have all the puzzle pieces to get there. And it's not going to take a lot more to reach that and reach it quickly. And so we're sitting at a potential where we could actually more than double. But that's what we're guiding for right now, is at least a doubling effect of where we were, essentially today. And I also think it's going to be paired with, we've lined this all up. I've been saying for a long time, and I still have a few months left to be wrong. But I think that Bitcoin's push into the bull market is going to happen between September, which is the last data day. So September's behind, and through January of this year. Sometime in that 4-month period, I felt like when you look at how the cycle works, and generally, there's 180 to 250 days after a halving that starts to take off. We have a US election, which I think will boost investor confidence on the back end of that. And we have a couple other macro events occurring. We have some macro, downsides as far as conflict, but everything else, I think that the macro is really pushing that on a post-election basis, Bitcoin really has the opportunity to improve. So I'd like us to be in a situation, and we prepared ourselves to be in that doubling cycle right as the bull market goes off, where our costs are already controlled and largely behind us, so that I don't have to bear the cost of, the spread where now all my assets cost more, but my production instead has an outsized return. So we built the company and really paid attention to that for the last 3 years to be at the right place at the right time and kind of have that event occur, kind of where X marks the spot. So that's really been our goal and our target in everything we've done. And so that's where I think next year goes, is not only a doubling of our production capacity, but I think Bitcoin gets us to where we see more than a doubling of revenue, assuming Bitcoin cooperates.
Yeah, interesting. I was just asking about production rate because you're a commodity play now, and I'm just going to assume, hey, we know that Bitcoin's got to perform. Your price will be impacted by performance. I actually agree with your timing. I think if I'm first coming to Bitcoin, I think this is probably the greatest risk-adjusted trade you could do on Bitcoin with the least amount of time. Because literally, we're going to know if Bitcoin's performing in 4 months the way we all thought this was going to happen. 4 months, and it's probably not even 4. Do you think that the outcome of the election will does it matter who gets in as to what happens to the overall market, the overall interest rates, or do you think one is, and I won't ask you who, but do you think one is a better solution than another?
I think that we're fine either way. Whoever gets into power, interest rates have to come down. The Fed's going to have to impact that. That's going to make risk on assets such as Bitcoin have greater value. Because right now, anybody can just go park money in a money market and get a reasonable rate of return. no one's going to be happy with the rates of return in 6 months. So they're going to go looking for something else. It's going to push people into Bitcoin and other good assets like that. But so I think that's going to happen regardless. I think it's a magnitude question. How much better is it if one versus the other steps into power? And I think there's one that probably serves the industry better, because it'll just be a more friendly environment as opposed to a little bit of an uphill battle. But I do see, the SEC's taking moves that slowly signaling at least that they're at least starting to put down their guns, right? So like the industry is pushed through. They pushed through a lot of the uphill battle, and I think we're going to see it plateau regulatorily, because they just can't push back any harder, and they're going to have to ease up. I do think that also one president, importantly, let SAB 121 through, which would be huge for this industry. As soon as banks can hold digital currencies in a very real way, everybody's going to have Bitcoin, because if you can hold it in a money market account, your savings account, or a Bitcoin account, that's just that many more people that are going to go out and put Bitcoin on their personal balance sheets.
Yeah, I agree. The custody thing's a big deal. We seem closer than I would have thought we'd have been. I think we've made more advancements than the Bitcoin industry is actually giving itself credit for. It's the funniest industry, right? It says it's the greatest asset in the history of the world, and then it's constantly moving the goalpost. Constantly. It's the most bizarre industry I've ever seen, as far as the way it looks at the asset class, but then it behaves a very different way. That's why I was saying that I found the event in Wyoming really, really good, an indicator that I've never seen in this industry. Some of the biggest bankers in the world saying, now, gentlemen, what do we think is going to happen in 8 years? It's no more like what, not one person talked about price there.
Yeah.
It was all, hey, what's going to happen here in 8 years? Who's building the right stuff, right? This is going to be a monster, tens of trillions of dollars of industry. Bitcoin is an industry. It is not money. It's a whole industry that I think people are really underestimating the impact this is going to have, right back to the oil producers in the field, upstream. I think I could actually help you guys with some ideas, but I do agree. There's so many opportunities for y'all right now. You're probably going blind.
Yeah.
Right? You're probably like, oh my God, I can't take another phone call in another facility. Possibility. I can imagine. I suspect your cost. So when you guys go into a utility, do you just float? Or you float, but you get some protection from the utility because you're giving them their cool option?
We play both sides. So in some markets we float so that we get the opportunity to take 1.3 cents, when power's super cheap at 2 a.m. And then we go a little less protected. And then, for example, in one of the states we're in, we have full price protection. So we have a fixed price power cost, and we have a certain number of hours that we guarantee the utility back in order to get that. So we fixed it in some markets, we float it in other markets. My belief, I've follow the Henry Hub really close, and all power ultimately indexes to natural gas, and that's one of the best indicators in our market. If you look, it's basically flat or down over the next 3 years. So we want to have enough exposure to price improvements that we think are likely to happen in this market, while not being overexposed. Now, in the markets we're exposed, specifically Georgia, I could hedge that power with less than 30 days notice. So if we see trend lines go the wrong direction, we will buy power hedges and we will hedge it. But that takes a lot of capital to do. And as much as we have the capital, I don't want to go lock it up for 5 years. So, that closes your door to any kind of exit to a strategic.
You don't need to do that either. I've been doing, the natural gas is not going to see 350 ever. We have natural gas forever in the $2.50 range for absolutely ever and ever and ever.
Yeah. We feel the exact same way.
Yeah. This whole thing about, hey, we're getting ready to suck up a lot of energy. Well, that is true, but we waste massive amounts of energy. We're not anywhere close to efficient on the demand or the production side. You have a leakage everywhere across. In fact, you have a leakage in between the system. So that's The problem is nobody picks it up because it's not worth it. But it'd be worth it to you.
Yeah.
Because you literally grab zero cost nat gas. To me, that's the play. I'm coming in with zero for the options, for the up, because you should be able to. I would have thought you could build some of your business without much capital. You do the machines, they do the energy.
Yeah, there's definitely opportunities there. I always like to say there's not many utilities that they get fired for recommending, the boardroom the same thing they did yesterday. And that's the main thing is you walk in, you explain it, you said, well, sure, we could do that and we could all end up better off, but nobody wants to recommend it to their boss's boss. And so we're basically working our way up into the highest boardrooms. But a lot of these utilities, in order to get in the room, they're looking at, multi-year performance. And now we have 4 years of performance behind us in many of these places that's getting us in the rooms. And that's it. It's really, you have a very like old school mindset when it comes to utilities. And, some of them are so heavily regulated that everybody's afraid to do something new, and it's going to come. When it comes, it's going to be like a dam breaking open. It's going to be a big opportunity for the industry. And it's about being positioned to take advantage of it when it does come.
Yeah. Well, I have to just plug Trump here for 1 second. And that is, if I'm in your business or I'm in my business, I don't want regulations. I want reduced regulations. I have laws already. I know what's legal and what's not legal. We never get rid of any regs. Like it's frightening. We have departments that put regs on, but we don't have a regulation cleaning department. It would be like literally never cleaning your hardware, your software, right? You just pack it on top of Fortran, and anyway, it's a train wreck. But I do think that we'll have, with an administration under Trump, we have to get rid of some of these rules. I mean, you can't rebuild a country with this, right? You can't rebuild in Tennessee right now if you want to.
Yeah, it's become like the fourth department that hasn't been read into the Constitution is the administrative state that takes an even heavier burden than anything else in this country. And we absolutely need to clean that up. I 100% agree with you.
Yeah, it's hurting shareholders, man. It's hurting taxpayer shareholders. It's hurting our innovation. I mean, Bitcoin doesn't have to do this here. That's what I told Trump. I'm like, hey, there's 3 million jobs here. You want them here or Dubai? They'll take them in Dubai. They're going to make it tax-free to go to Dubai. So, do you want the jobs in America or do you want them somewhere else? Singapore will take them. This is an opportunity for us, but it's not a gimme. It's not our chosen right. You're one of the most cost-effective miners, right? Your cost, you're creating Bitcoin today or mining Bitcoin today for what kind of cost? Can you say?
Yeah, $27,000 for energy for Bitcoin.
And the highest miner, American miner, his number that competes with you, without giving his name, he's in the 70s. Is that correct?
That's correct.
A very big spread between how you run your business and how another team runs their business. Not all miners are alike. That's a fact. Not all refiners are alike. This is a really complicated business. How long have you guys been doing this? It's been a journey for y'all, right?
Yeah.
You didn't come out of the PE manufacturing facility yesterday, did you?
No. Our journey started in energy. So I co-founded the company in 2014, and we were in the energy space, specifically with microgrids. We were doing a lot of data center work for energy efficiency. And I went and saw a data center in 2020 that I didn't know was mining Bitcoin. I thought it was a regular data center. And that was my first real exposure to Bitcoin as far as the business side of this, the industry side of it. And when I ran the numbers, I went back to my board, 6 months later, and I said, we shouldn't sell these guys an energy business. We need to buy them. That's
wow. Nice. I love this story, man.
Yeah, so we bought the data center and in December of 20, and we sold the energy business mid-21. And we've been 100% focused on Bitcoin mining since then. And, we we really feel that one, we came energy first, because again, that's where your cost is, your main cost. And then second, we came with perspective. You know, we were really the last miner before Bitcoin went from 10,000 to 40,000 in January 21. And so there were a couple other miners.
You mean when you say last miner, you were the last guy to survive, or?
No, the last miner at large scale that entered the space publicly. So we were like the 10th or 12th miner on the list if you were to think about Bitcoin miners at the time. But it gave us all, we saw how everybody's entrenched in their own ways, and we took the best of everything and made it our business model. So that's what we always do, is wake up in the morning and, you know, it's the same as a portfolio. Are you going to rebuy that portfolio today? We think of that the way we do business. Are we going to redo what we're doing today? And if not, we're going to change it tomorrow to always be the best. That strategy over ideology approach has been what it's allowed us to climb up the ladder to be, you know, where we are today. And I think that's the reason that we're doing so well. And I would say that we're the best miner. We have the highest uptime. We have amongst the lowest cost. You know, we're doing it the right way. And a lot of miners are unfortunately entrenched. And all they had to do 2 years ago was prepare a little bit differently, and they could have been in the same place. I think that's the biggest difference for us, even though we've only been in this for going on 4.5 years now, and some of the others have been in longer. It's about measuring every day independent of the day before.
Yeah, well, this is the farming business, right? Like it's every day. It's not, hey, what did you do last year? But at 24,000, assuming your cost of capital isn't stupidly more expensive than, say, a Riot or a Marathon, your competitive advantage is severe, right? I mean, this is, and so you're 24,000 post halving also. So your cost didn't go up. Your output may go down. Have you seen that your output's down? Because I would say, I thought you were going to tell me that half of your capacity was offline, but you're not doing bad considering we just had a monster hurricane roll through here. You got 22 exahash, is that correct? Right now, or 20?
Yeah, so we actually passed 20 in June of this year. Again, with the hurricane, we're at 22 right now and expect to be back up at that 27, 28, you know, within the next few days as power gets restored in the hurricane area. So, you know, from a hash rate point of view, we're sitting in the number 2 spot by total hash rate. And, you know, I think we're going to keep climbing pretty quickly. So,
and what's interesting about our costs in our fleet, right? Because that $27,000 number I gave you is for last quarter, which had 20 days of the 91 days in the quarter, was actually pre-halving. Okay.
Pre-halving,
right? Because the halving was right around April 20th, something like that. Right. And we had about $104 million last quarter. Right. But we've managed to outpace the difficulty adjustments as well as the halving, right? Which really just goes to show what our fleet efficiency is. And what's great about that is, even if the economics and hash price decreases, right, we'll be able to be one of the last miners to turn off, right? Just because where a break even is. And the break even will move more. Well, actually, the break even will change as difficulty goes down. We can actually run longer at lower Bitcoin prices. And that's something that Zach and the team was working on 3 years ago when they said, you know, we got to prepare for halving. And that's why we pulled, you know, all these state-of-the-art miners forward to have really one of the world's most efficient fleets.
I take it the uptime running without failing, not running is failing, right? I know you guys don't want to hear that, but that's just the truth, right? Marathon probably wants to hear it less than you do. But that is a critical piece of being in the energy business, right? There is no like, yeah, you know, we were up 85%, but they failed to forget, 15% was when you were going to make all your money, you ding dong, right? So how do you manage that? Or maybe better, the spectrum for operating performance along miners in the US, what does that look like?
Yeah, you know, a lot of it comes back to the markets you choose to operate in. So we've specifically chose markets where we can run 24/7, 365, and we can skip it here and there and maintain this incredibly high uptime. You know, in the spectrum, you know, some of the worst performers are 60% right now. And so you think about,
you're at what?
We're about 98% consistently throughout the year. So
60%. See, it's like apartment building. Anybody that owns real estate, just think about it. All my facilities are at 98% and yours are at 60. Even if you charge more, man, you're taking a spanking, right? It's like, that's running the business. Your uptime, 98%. Excellent. How does an investor look at investing in something that's up only 60%? What, it's all upside from there?
you know, the ones that are only running 60%, I'm scratching my head too. You know, again, they're making trade-offs. Some of them, they're having that really low percentage. They're doing more energy arbitrage, right? But you have to ask yourself, you know, where's that going? Most of it goes in credits that can be used in future years. But all those hours you weren't mining, did you really get your full ROI on your investment? The answer is almost unequivocally no. And so as much as it can look interesting from a story point of view, that 40% of time you didn't mine usually costs more than whatever your revenue was on your energy arb. And then you have, you know, some that are in between that are around the 80s. They're just bad at operating. You know, I hate to say it, but again, this is not an easy business. You know, we run our own repair fleets. We do in-house. I've got people all the way down to the chip level. And then you have to maintain a workforce that knows how to address it. There's a lot of remote issue problems, a lot of heat problems. Like, these things have to be dealt with immediately. And then your machines have much longer, more productive lives. That's a big thing that's also missed, is a lot of people that have a machine go down, and the reason their uptime's so bad, they don't do anything with that machine because they don't know how to do anything with that machine, how to get it back online. They have to bring in outside parties to come in, pull it on.
Oh, wow.
And so it's about having the right expertise in-house. That's where we've focused our, you know, you think about going a level deeper from an optimization point of view. Everything that an outside party provides to many of the miners, we brought in-house. And because it's always cheaper to have your own people do something than it is to have somebody else. Because not only the time opportunity lost, but also the direct cost. You know, the only reason the other guy can make money is because the guy on his payroll, he's charging you double for. So we avoid that cost, and we get it done quicker and faster to maintain our uptimes.
And what's interesting is some of those miners that might have subpar uptime are ones that want to investigate going into AI, which they're going to spend large amounts of capital, $60 to $90 million, including the GPUs and underlying infrastructure per megawatt, right? And they're going to go in an industry that requires 99.9% uptime. So it's going to be quite a learning curve, I think, for certain miners, and you know, it'll be interesting to watch.
Yeah, well, when I hear this stuff, I'm like, uh-oh, here we go. Some financial engineering going on. This industry is extremely exposed to financial engineering. That's the core business and not mining. Now, if you can do some financial engineering and be up 98%, that's awesome, right? I mean, you're not going to not do any. Wall Street wants you to do some. But I think Gary, I agree with you. It's going to be very interesting to watch. There's going to be some books written on proper management in mining and improper management in mining. I meant to ask a question on the credits that you get for the volatility play that you sell back to the utilities, or they have a right on. How do you deal with that cash, Gary? Maybe that's a CFO question, but how do you stick that on the balance sheet? Is that a mark, or is it, how do you bring it forward?
It goes right against the power, right? So it reduces the power costs.
So does that mean, like, tomorrow you don't have to pay 2 cents for that next extra gigawatt or a kilowatt?
Yeah, we don't carry anything on the balance sheet or anything. It's near real time.
Oh, wow, that's cool. So you're not waiting, because I think Zach said something about you give that off the future. Do those credits go way out in the future, or they're prompt?
For us, they're prompt, so they're smaller because we get an outsized credit that we could use in a year. But I'd rather take the smaller spread and use it tomorrow. So I'll give you an example. There's a utility we operate in Dalton, and we have a fixed price there, and that fixed price is reduced by 16 points on it, just for their ability to call us on an emergency basis. We've never been called ever. They've never needed to call the load, but I get to take those couple points off real time on my power bill, wherever it's at.
Yeah. Yeah. That's awesome. That's awesome. Have you guys specifically decided to play in America? And if so, why? I like that idea, by the way.
Yeah.
'Cause I think it's impossible. Like, it's hard running multiple countries.
Mm-hmm.
What is y'all's decision?
Yeah, so we've put our foot down and said that we're going to focus domestically. CleanSpark, America's Bitcoin miner, is actually our trademark, and it's where we've chosen to grow. Now, we think in our backyard is the right place to grow Bitcoin. Both from national security reasons, from I think regrowing jobs in rural America, Bitcoin mining there's no better way to do it than that. Now, with that said, I think that we'll still have some touch points long-term internationally, but in the same way that Coca-Cola has, that internationally too, where, they very much focus on their domestic advertising and everything else in their factories. But then if there's a great opportunity internationally, we're not going to ignore it in the same way that, you can gain market share in a lot of different industries. So, but we are absolutely focused on building the opportunities in our backyard. And when bigger international opportunities come, we'll just take the CleanSpark way. And we actually like the idea of leading, in places, whether it's, Africa's a great example. We like the idea of leading with an American company. It's very receptive. So you're always known as the American company that's there, that's doing, a good thing for the local economy. And that's how we'd like to see our image grow, rather than, fleeing the country, which is unfortunately what we're hearing from some of the miners. They're saying it's too hard in the US. There's better opportunities, offshore. We don't agree. We don't agree.
Yeah. Well, we'll see how that works out for them. Having lived in other countries, I think it's very easy to say until you've done it.
Yeah.
And this thing that just happened in Brazil and France, I think it's a big issue. So as a shareholder, I'm like, oh, okay, you're going to be US. At least I know our SEC and our regs are completely screwed up. I know how screwed up they are, but I don't really understand how to get money out of Brazil. So I don't speak their language. I don't speak French. So I think you're going to see that's going to be a good strategy for you guys. People are going to be like, yeah, I'm going to invest in the US. I cannot control geopolitical risk right now. And there's plenty of opportunities here.
Plenty.
I don't understand why anybody's saying they'd be having a hard time, because I can show them near zero cost energy today.
Mm-hmm.
And why they're paying 5.5 cents, I don't know. I think it's because they ended up with a contract like that. The cool thing about doing business with the energy guys, you can actually retrade the deal. Like, if you have something to give, I mean, they've retraded and been retraded their entire existence. But I think there's massive areas in the United States where someone like you can actually help them create more money. Like, literally, they're not getting anything and it's millions of dollars every day, but they'd have to spend $1 billion to go capture it.
Yeah.
And it's just like, it's not worth it. And the small guy can't really do it because it's so capital intensive. So it's a very interesting industry. I was with the chairman of the board of Williams the other day, and I asked him how mature had the energy business come since it's been deregulated. And he said, oh, wow, it's only still halfway. Like, it's still culturally very stymied. It doesn't make change. He bought a trading business that had not made money in 5 years for $25 million. The next year made $250 million the first year. He said, it's just about how you think about the asset and what you do with it. You're either most of these utilities aren't commercial.
Yeah.
He's highly commercial, right? And I think you seem very, very commercial. What's been your biggest challenge? Either one of you. Is it the machines, acquiring the machines? Is it regulation? Is it people, capital?
It's our biggest asset. I'll address that just kind of a different way. You said people.
He must be the CEO.
Yeah.
The CFO will say, okay, these are our negatives. CEO's like, they're all positives, man.
Yeah. The people have been great because, again, this industry, it's so new. You want to train everybody in the way that we do it as opposed to coming from somewhere else. So I think that that's been a huge win for us. I do think that the building, the actual infrastructure part there, it's a challenge, right? You're doing construction. Again, it's the same as building a real estate project. There's always something that's going to go wrong along the way, some permit that you need that, some city council member drags along. But like once we're up and running, we really have it fine-tuned. Everything we can control, we're doing well. So it's the things you can't control: Bitcoin price, permits. Those are the pain points for me. I don't know what you think, Gary.
Yeah, no, I agree. Maybe we add to the list there, in addition to the growing hash rate, maybe the sophistication, really maturity of the market in terms of like derivatives, right? There's certain things that we want to do with our HODL balance. I mean, we're approaching $500 million of Bitcoin on the balance sheet, here very soon. And, there's just not a lot of options, particularly when you take counterparty risk and you put it at the top of the list of risks. Like, we just don't want to give our Bitcoin to anyone. So, having a much more mature kind of TradFi or traditional finance type of products in the space, I think would be really helpful. And that's coming, right? That's going to come. We're hearing things that were some of the big players in the space are going to start having some product offerings over the next year. And I think that's just going to help us optimize our business even more.
Well, the options market for you guys is going to be massively important, especially when you're 24. I mean, even if you go to, let me just pretend, since you're a public company, let's pretend that you go to 48, you double the cost of your Bitcoin post-halving. Like, you could still cover that cost in a put at 80 to 100 grand. I mean, it'd be interesting to see what some long dated puts are. And would you really even need to pick a whole year? I'm not even sure you'd need to buy a whole year.
Yeah.
But
Look,
it seems to me like, pardon?
There's a lot of options right now. I mean, look, the ETFs out there are fighting for the same liquidity at the same point every day, right? And so we see that you can lend the ETFs on a short-term basis for 4 to 6% annualized, right? And so when you apply just a conservative 5% on $500 million, I mean, that goes a long way, either padding your HODL balance or reducing overhead. Yeah.
How big is your team? 100 plus, 111 or something?
We're actually right now right around 300. So,
oh, wow.
We've had a couple acquisitions in the last couple months that have really added to that team as we've moved into Tennessee. We're spread across 4 states of operations right now. And
hey, I know people have spread over 8 countries.
Yeah. And again, staying focused in those 4 states has been good for us. So, yeah.
What the 300 is an increase of how has that been a hard challenge to deal with the added people? And what's the volume of people over what period? 4 years is pretty quick.
I think we went from 125 to 300 this year.
Whoa.
So it's definitely been a challenge, but it's the biggest challenge has been about keeping the culture intact. And so that's been our #1 focus with it. I do think that there's some like benchmarks where you always have the biggest challenges, learning curves as you deal with employees. And I think like 80, 125, right around this 300 mark's been interesting. And I think at that point, as we hit 500, 600 employees, let's say 2 years from now, I think we'll have a new set of challenges. But, we have a great team that we've just kind of marched forward, as we've hit each of those benchmarks where, naturally challenges form.
Yeah. Guys, I really appreciate your time. I've stolen 50 minutes from you and your management, 300 people. I should have only taken 20 minutes. I appreciate you guys. I'm having a space here in a little bit. I don't know if somebody's going to join me from your team. I'm sure people will have comments. A bunch of people want to ask questions. If you do, let me know. I really appreciate it. I will say I am a shareholder. I own 3 other miners. I like these guys. I like your U.S. focus. I think that's really, well, actually, just like your focus. Like, I have not met a miner. My biggest issue with Bitcoin is not mature. It's a very immature industry. And when I see this kind of maturity, I think people should pay attention. when you have this type of maturity, and these guys are coming from energy, I also like that because you've seen the damage that can get done, even when you're perfect. You can just blow a hole in your leg. But in that, I think y'all's exits, if you stay focused here, I think I've already had thoughts about, who would be interested in this business? Because somebody could buy you for $4 billion, $5 billion. It's just like, oh yeah, let me take my credit card out. I mean, really. So I just see there's some upside here if you guys do it right. So thank you very, very much for coming on, and look forward to probably adding some shares.
Excellent. Thank you.
Thank you. Good
Thank
seeing
you
you.
guys. Appreciate it.